Good morning, ladies and gentlemen. This is Brad Matheny. In an attempt to expand on the simple trade setup video that I created for all of you, I want to try to expand a little bit on breakout patterns. The first video I created was all about trend lines and price channels and trying to find the low risk trade in a price channel. Now we're going to try to look at consolidation, flagging, and breakouts. We're going to see a different type of market trend here, and understanding rejection is very important, while also understanding flag and pennant formations is very important. But again, trying to understand where the real volatility range is during the breakout, which is again based on Fibonacci price theory. So we're going to start here with XME. This is a weekly chart. You can see how I've drawn these across these rejection areas here, not off of this low. The reason being is it came and tagged this area, tagged this area, and tagged this area. So to me, this is very critical support. In fact, I'll change this to green. And this provides a very critical window for us moving forward. Now, on a weekly basis, we have immediate, and when I say immediate, let me drag this. I'm talking about immediate price highs right in this area. And again, this is based on Fibonacci price theory. Fibonacci price theory teaches us that price is always attempting to move to new highs or lows. Because these are weekly bars, one low here is a unique low because a couple of bars back, we're 21 days back, we haven't touched this low. So we've got this range here. Let me expand this out. We've got this range right here that becomes very critical for us moving forward. In fact, we're testing it, looks like right now. So from a standpoint of a breakout range, you need to look at previous highs and lows. And remember, a ultimate high or low or unique high or low is one where the current high has not been touched in the last 21 days, typically 15 to 21 days. So we have another unique low way down here, and we have a unique high because it's been touched right here. Briefly, I wouldn't consider this, but an ultimate unique high right up over here. So ultimately, price must attempt to get above this level up there at the high or this level down here at the low. This is the broader range breakout. This is the intermediate range breakout. Now, if we go down to the daily chart, we'll probably see a couple of other triggers. So from this standpoint, we're looking at trending, upward trending. We're looking at stronger volume. We're getting good, strong volume to the upside right now. And we're looking at the flag formation, which essentially sets up this top, pull back, A, B, C. I'll do it again, up to the top, A, B, C, D. And I believe we're going to get an E formation here. Now, we could be looking at a secondary flag from these rejection points. I'll draw them across here, kind of like this, and then across these rejection points here. So we could actually be looking at a flag within a flag. And what we would have here is A, B, C, D, E. So in reality, ladies and gentlemen, we're looking at a, try to find it. We're looking at a pretty solid upward type of a move here with a flag within a flag, knowing that this $54 area would be our big breakout range. This is where we want to go long. And we would be trying to buy anywhere in this lower range here, ideally trying to load up kind of in this area here, because this gives us a very low risk entry for this move. Now, from a standpoint of this move where it's taking place, getting into this mode, let's go ahead and take a look at daily. I don't want to spend too much time here because I want to move to the other charts. Big gap. You can see here, get rid of windows, big gap to the upside. Very positive. May come back down and fill this, but still very positive. So we need to look at this as a potential breakout. We've already highlighted the peaks and valleys. Remember, this is our ultimate low. This is our ultimate high, meaning that recent ultimates, then we have the upper and lower range. You can see where we're at through this rotation. We have a little bit of a downward trending through this rejection. So I would look at, see, here's the rejection, here's the rejection. So reality may be here to, it's almost a horizontal line. Rejection, rejection, rejection. I'll go a little higher, come right across this area. So we gapped above the rejection area. And look at how I marked this rejection area. The rejection areas, we got above it, we held above it, we rejected. We got back above it, we inconsiderate, in no direction, we got back below it. Got back above it with a gap, got back below it, got above it with a gap. We need to hold here and break above this level. Very critical. We break above that big level right there. So we are very close to moving into an upward trend. We have technically gotten above this moderate unique high right here. And again, this becomes a Fibonacci price trigger. This is telling us that we are bullish and that in the short-term trend, we are bullish because we got above this trigger. So we are looking for this breakout to occur and looking for a move potentially because we don't have any other highs. You see here across these levels, we have no other unique highs. So we would be looking for a move in XME right up to that level. So from 53 to 59, a nice 10% move with a risk level, stop level should probably be placed right below this gap right in this area. This gives us a fairly safe mode of protecting our trade. And you would have a 3% risk with a 10% potential target. So there's an idea of how you set up, look at, and trade these types of breakout formations. Now, I've gone into quite a bit of detail here with this double flagging formation, but it's important you understand these things. So again, looking pretty good. Let's go back here to weekly and go to the next symbol. I've created this little list so you can see. Well, XOS, you're looking XOXS, sorry. Where's the flagging formation? Where's the trigger? Well, let's go back in here to daily. And what we have here, ladies and gentlemen, is we have a sideways ranging. So if I come back in here and leave this here, we've got a intermediate high, which is not a unique high. Why is this not a unique high? Because price has already touched it within the 15 to 21 bars. So this becomes it's called a standout high. We got a re-support here, which aligns with this. Actually, I'll draw this back here. And then we have these multiple rejections. We even have a deeper rejection line right down here, right around that area, that becomes our ultimate deeper kind of a trend. So understand that this becomes very deep rejection point. We have this standard rotation. You can see we've got lower lows, lowest low. This would become our ultimate low right down here. And that would be our warning. If market breaks below that low, we're going to see it really move downward. These are the areas that we're concerned with right in here. This gives us an idea that we do have some type of flagging off of this low coming across this rejection point right here, out to here. Then we have an additional rejection point across here, really across this area and this rejection point here. I'm going to move it kind of right out into here. And we are getting just above this rotation here. So we A, B, C, D. We do have the potential for, you must understand actual pennant formations. We do have the potential for a move back down into this area before we start to see an upward trend. but we have an upward trend that looks likely to try to retarget this area on technology weakness and a semiconductor chip weakness. And this gives us an opportunity. If we look at our ultimate low, we have a downside risk. Let's pick the middle of this flag, potentially as our entry area of maybe, well, it's a little deep because it's a small price number. So maybe 5 to maybe 10, 11, 12%. And then we have an upside number of maybe from the middle of the flag up to 15, 16%, all the way up to this area, which is rejection. In the middle of this rejection, maybe a 69% move here in XOXS. Now, understand that this is because of the very small range of price, we're seeing big percent numbers. So you might want to consider how you trade this and when you trade this. In my opinion, this is again my opinion, knowing that I think that we're going to get a downward move. Remember, I counted this out for you, A, B, C, D, E. If we do get that downward move, then we're going to be looking at this gap filling right in here, this gap, and moving back down towards this rejection area. I would say this is your buy zone. So pretty much from $10 down to $9, call it $9 even. So again, the breakout range is got to get above this level right here. This is our upward breakout. This is our intermediate support level here. This is our ultimate support level, and this is our ultimate low. Getting down into this area would be very, very dangerous. Very, very dangerous. You do not want to be in that area at that time. Sorry, my email's catching all these people that like my other post. Okay, I'm gonna have to speed this along. SILJ, setting up a very nice trigger. Look here. I'm gonna try to speed this along. We've got a downward price channel trend with rejection areas across here. Eventually found bullish rejection areas across here, flagged out and broke to the upside right here. And come in here, boom. Broke out to the upside, confirm. There's really our buy trigger roughly to the upside. Very solid trigger. We rallied back up here, flagged out, broke down to the downside. So you can see these breakdowns in trend, they still follow the same pattern. I mean, you can clone this and drag this over here and look at how we're getting into this trend, and then we get the breakdown. The breakdown sets up a double topping formation. I'm going to do this here with a double topping formation right around here. We'll create one here and then clone it and come in here and say we've got a double topping. And this gives us an area where we know now we've got clear support down here. We've got clear resistance over here. We had a bit of rotation. Now, remember, this is a weekly chart, so daily would have given us nice, clean triggers. But where we're at right now, right over here, we've got a very solid move setting up here where we got a base, rally to a top. We can see the clone here doing what I taught you earlier, cloning around these rejection areas. We're in this mode here. We're holding above support. You've got an upward target way up here, potentially. Keep doing this. Upward target way over here. We've really got, and again, this is a low price stock too. So you're going to see here a risk level of 11%, potential target level at this point of 23%, maybe up to these upper areas if gold really takes off to 55%. That's again roughly a 4-to-1 risk reward ratio. And what you're looking at is how the channeling plays into the Fibonacci price structure and flagging formations. Remember, this is our primary flag right here. So I'll make them purple, 3, purple, 3. So here's our flag. You can see it flagging downward, tightening in its range, getting ready for a breakout. Ultimately, guys, the actual Where am I? Text brush. Ultimately, because of this mode, we could see a bit of a dip before we see the rally. So be aware that you might be able to buy down here around the 913, 920, maybe 880 area before we get this potential rally mode. But there's a very good opportunity. This is going to set up and rally out as fear sets up for miners in gold. Now, GDXJ is setting up the same way. This is again a weekly chart. You can again use the same triggers, the same rejection areas, looking for channeling. It's all part of price structure and price theory. It's very, very important that you understand this. We have a double bottom support area here that aligns with rejection back over here. We've got kind of a double topping pattern. You see the rejection here and here, got up, stalled, got up, stalled. I would bring that right back down to this area, the doji's back over here, and say that this is our rejection area. And, oops, I don't want that. I would say that we have a ultimate high back over here. In fact, I'll just drag this out because this as the ultimate high becomes a very critical level, and clone this as our ultimate low down here, right around that area. So, from a standpoint of understanding where risk is in the trade and where we're at, a potential stop level for this trade would be right below these most recent lows or down in this area. And a potential target for this trade would be up in this area, most recent rejection area, maybe a little higher. This gives us a potential risk on the trade if we were to get in right now at about 7%, and a potential target at around 14%, maybe a bit higher. So that's a 2-to-1 risk reward ratio. And what we're looking for, ladies and gentlemen, is breaking this channel and breaking this flag. We're very close to breaking this flag, but you can see how this support sets up buy areas back down in this area, anywhere down in this area is a great little buy zone, because this buy zone down below here in this range is a very low risk trade. Knowing where we're at, knowing we hold support, knowing we have this rejection area, if we get down into these areas again and or see any pullback, this is a very low risk area. We still have a pretty good trade here, but not, I would prefer to buy down in these lower areas, but we're setting up for a breakout, which gives us a real range for 14 to maybe 45%. Okay, last, SSO. SSO is setting up weekly, very clean. We've got a downtrend breakout here off of the daily chart. We need to see this flagging formation play out. This is weekly. You can see how I've drawn this. We do have this channeling. Remember, everything I taught you earlier still applies. We still have this channeling take. We had a breakdown here, which went bearish. Now we're seeing this flagging formation. We'll go to daily. We are looking for strong volume. We don't have any strong volume yet. We would be looking for a big green bar coming out here. We do have this A, B, C, D potentially in this area, maybe here, and then an E move. So I'll draw that for you. So basically it comes up A, B, C, maybe D, and then an E move to the upside. What we would be looking for is, as we've set up new highs, we got above this high. This is a standout high, not an ultimate or a unique high. So we got above this high, which means very short term, we are now bullish. This chart. This tells us that on a very short term basis, we are now bullish right there, right on this bar. Let me highlight it with a vertical green. That tells us that we are bullish. Now, at the same point in time, we have the flagging formation setting up. We have the sideways channeling. We don't have any real trending. We could hypothetically project that if this trending holds up, we might see something like this as far as upward trending. And we could potentially draw a line like this, but we're really looking for a breakout in this area. 58.60, 58.70. getting above this flag formation and ultimately above this high here at 59.66, then we get a solid breakout to the upside. Risk is very low. It's probably about 2 to 3%